Well, this is absolutely brutal. If I'm going to be completely transparent with all of you, this entire market, this situation, paying attention to the intraday movements is nothing beyond emotionally exhausting. If you miss what happened in the market today, well, to, I guess, no one's surprise, even though I guess I found it to be surprising, Trump once again torpedoed the market. As I'm going to be showing you in this video, the way in which he did it was crazy. We started off really weak because the quote-unquote spat between US and China kind of devolved overnight, and then throughout the trading session, it actually looked really good. We had a strong recovery. We got good news across the board. I'll be breaking that down. And then right at market close, right with about 20-30 minutes to go, Trump decided to lose his mind over cooking oil. Yes, you heard me right. The reason President Trump torpedoed the market again today is because of cooking oil. I guess this just reminds me of why we can't have nice things. In this video, I'll be breaking down all of the chaos that you might have missed throughout the day. And then most importantly, I'm going to give you my thoughts of what I'll be personally looking at for the remainder of this week to get an idea, a little bit of an inkling of who in the world's in control, the bulls or the bears, or are we just on a runaway train at this point? Before we get to that, if you enjoyed these type of market breakdowns, don't forget to like, subscribe, turn on your notifications, share the video with a friend, give me a what's up in the comments below. And with that being said, let's get into it. I must admit today's intraday trading session was one of the most wild ones we've seen in a hot minute. So here's how things officially closed on the day. S&P 500 closes in red during volatile session as Trump knocks China once again. But what's interesting, a mere 30 minutes ago, a mere hour ago, everyone was ripping it. Wall Street is firing on all cylinders, fueled by deals and trading. And then a little bit after that came out, this is what we got. We got a drop of about $450 billion in 7 minutes because of the president starting to threaten China again, and this time it related to cooking oil. As you can tell, that's pretty crazy. We have a lot to chit chat about, so let me start breaking it all down for you. Today, we started off very weak and had somewhat of a recovery, and that recovery into close then got smacked. But overall, we're still really not that far away from the all-time high, but we're also not that far away from breaking the 50 EMA. Pretty much a similar situation in the NASDAQ 100. And in fact, at one point today, the small cap was so strong, the Russell 2000, it actually hit a new all-time high. So this daily chart probably tells you like, all right, maybe I'm seeing a little bit of a recovery. Maybe you're sensing that out. But the intraday session was wildly different. Like I said, look at this overnight. This is the situation that happens when China says that they are willing to fight until the end, and then people get scared right at market open. They buy the dip and we rip. Everyone's like, oh no, the bull party is back on. And then you could see around 3:30, the bull party was very much not on. So price action in itself looks crazy. The Russell did all right. Vol was high when we opened, we puked, and then because of Trump, we spiked again. And what's even more crazy than price action is what happened in the world of options. Delta popped up, it was jagged, and then just a ugly waterfall puke into close. Same thing in the Mag 7. We puked, we popped. Things were somewhat decent. They were stable, and then an absolute puke into close. So let me run this back in order so you can really understand. Around midnight yesterday, when we were all sleeping, this is what caused the futures market to kind of take a hit. Just in, China says it will quote unquote fight to the end if the US wants a trade war. If you wish to negotiate, our door remains open. China escalates U.S. trade fight with curbs on shipping. So this is once again when we were all sleeping, and then it wasn't made any better by our own Treasury Secretary, who said this to the Financial Times. Basent tells the Financial Times that struggling China wants to quote unquote pull everybody else down with them. So that's pretty much why there was a lot of negative sentiment and bearishness coming into market open, which is why we saw a sell-off right at market open, worsening what we saw in the overnight session. And then all of a sudden, we found a bottom. We found a bit of stability, and then out of nowhere, the bulls started coming back into the market. And at first, this related to what the trade rep had to say. Trump trade rep says new 100% tariff on China depends on Beijing's next move. Now, I know that doesn't sound so positive, and this isn't the best headline, but here's what you really need to know. U.S. Trade Representative Greer says Trump administration thinks they will be able to work through it, quote unquote, with China. A meeting between President Trump and President Xi has officially been scheduled. So people really like that. And then they started started to really hop on the fact that, oh wow, they're actually going to talk, and it sounds like it's going to be in South Korea. President Trump and Xi scheduled an in-person meeting to negotiate trade. People love this, and that's why intraday things were looking really, really good, and then they started to look even better when the chairman of the Fed, Powell, started talking. Powell said Fed may stop shrinking the balance sheet in months ahead, as in getting away from this quantitative tightening, maybe opening up the door for a little bit of quantitative easing. Fed's Powell suggests tightening program could end soon, offers no guidance on rates, but with his commentary, it basically solidified the fact that we are getting another 25 bips rate cut at the end of October. So a little bit more dovish, we're getting the rate cut, maybe the end of quantitative tightening. When you put that together with the markets like, oh wow, President Trump and President Xi are actually going to talk, that's exactly why midday things were absolutely phenomenal. But as I said at the start of this video, I guess we cannot have nice things, because with 30 minutes to go, President Trump hit us with this beauty. I believe that China purposefully not buying our soybeans and causing difficulty for our soybean farmers is an economically hostile act. We are considering terminating business with China having to do with cooking oil and other elements of trade as retribution. As an example, we could easily produce cooking oil ourselves. We don't need to purchase it from China. So even though there's really no policy update here or action, it's just a vague threat. Well, that was enough for the bots to interpret this news, start selling the market. People started to panic, and since it's 0DT and driven, people started to get out of their calls, and that's exactly why that little half-hour puke at the end of the day got as bad as it did. So yes, this is painful, but the question is, where do we go from here? And in all reality, if I had a crystal ball that told me that answer, I wouldn't be making this video. I'd be a billionaire on a beach somewhere, because I would know exactly how to play the market. But I would say overnight, we just have to be patient. If China claps back, things are going to get worse. There's going to be another gap down. All of a sudden, if we get more commentary of, nope, this is a misunderstanding, we're going to come to an agreement, you're going to see a gap up. I give both of these a 50-50 shot. And it's just one of these things that you can't predict it, you can't model it, unless you have some sort of insider information related to politics on a global scale. Beyond that, don't forget that the government's still shut down. Well, right now they are still anticipating it going all the way to October, at least 34, 35 days. I'm looking at the call sheet market, which means for the remainder of this week, we're not going to get any of those very, very impactful major macroeconomic data drops, such as initial jobless claims, CPI, PPI, non-farm payrolls. And it sounds like we're not going to be getting any of those for the entire month of October, which means that the Fed is going to have to cut rates with no new information. So basically, we're back to flying by the seat of our pants in the dead of night in a high volatility, highly chaotic market environment. So if you want to be reasonable and safe and non-degenerate, well, you have a couple options. You cannot engage in the market right now at all, especially in the short-term day trading, scalp trading, because you never know when random news is going to hit. And if you choose to do it, you could still be a little bit safe by dramatically sizing down. That's another option. Obviously, I'm not your mom. I'm not in control of your money. So if you would choose to engage in the market at full size, or I don't even know why you would, but lever up, well, I just wish you the best of luck. If you get onto the right side of it, you can make a bunch of money. But right now, I don't think that there's any empirical evidence that we could really use to try to predict who's going to win this battle between the bulls and the bears, because right now, price structure, options flow, momentum, all of it is changing on a moment's notice because of headlines and tweets and Truth Social updates. It's a bunch of randomness, and I'm a person who likes to trade on stats, facts, and figures, and right now they might either be blown out of the water and proven incorrect, or they could get really, really amplified based on pure randomness. Now, I know that's a little bit of a dismal statement to end this video on, so let me give you one piece of measurable information. Coming back to the S&P 500, and of course you could do this with your favorite index, your favorite equity, but look at the reaction we had on Friday. This is going to be the established range that I'm really personally paying attention to, and I'll be waiting for a nice break of momentum to the upside. We take out these recent highs, the trend line, and start pushing that upper line. Or on the bearish side, well, all of a sudden we get rejected here, and for the third time, we start to press basically this 50 EMA. I'm basically waiting to get an idea of which way momentum is going to break us out of this range, and then ideally, I'll just be playing it in that direction. So right now, I guess it's wait and see, or maybe we could call it wait and pray. But whatever it is, you need an extreme amount of patience and a little bit of luck to really get through this environment, because clearly it is high octane volatility. Of course, these are my own thoughts and opinions, and I would love to hear from you in a comment below. Are you buying? Are you selling? Or are you just sitting on your hands waiting for this to all calm down? Maybe it'll give me something to read tonight and calm down, because like I said, this is just emotionally exhausting. That's what I have for you today. I hope you absolutely crushed it today and made a bunch of attendees. I hope you did better than I did, but I appreciate the good vibe, and I'll catch you in the show tomorrow morning, 9 a.m., bright and early. Hope to see you there. Peace.